He says the recession, though, will only be mild, that consumer spending is still strong. Note those comments came before Target's weak earnings today. Federal Reserve is raising interest rates to fight inflation, but this could slow the economy into an economic downturn. So, Fed's chairman wants to navigate a, quote, soft landing as it raises rates, but recently admitted that won't be so easy. Wells Fargo isn't alone in thinking we're heading for a recession. Conference Board survey found a majority of CEOs feel the same way. It said, quote, CEO confidence weakened further in the second quarter as executives contended with rising prices and supply chain challenges. Target CEO today said it sees no end in sight for those rising prices. When we talk about a recession in 2022 or 2023, what exactly are you expecting?
Well, first of all, I think the recession has already started. I think we're in it now. It's just early. In fact, the first quarter was already a negative print. And I don't think it's going to be a mild recession. I think this recession is going to be worse than the Great Recession that started following the 2008 financial crisis. So, and remember, the government didn't see that one coming either. And in fact, when we were 6 or 7 months into that recession, the Federal Reserve and other economists still claimed that there was no recession anywhere in sight. So this recession is going to be much worse than that one. And what's going to make it particularly problematic is inflation, because inflation is actually going to be exacerbated by the recession. So Americans are going to have the worst of both worlds, a worse recession than the Great Recession of '08, but worse inflation than anything we experienced during the 1970s.
So let's take it part by part, Peter. So first of all, we hear the banks are well capitalized this time. They're stronger this time. How could it be a worse recession than 2008?
Well, that's what they said last time, right before the financial crisis. They said the banks were in great shape. Look, the banks are only in good shape until the value of their collateral collapses and people can't repay their loans. That's what happened in the last financial crisis. This one is going to be even bigger because the economy has a lot more debt now than it had in 2008. And Americans are less able to pay it when interest rates rise because the balances are much greater. So we're in much worse shape as a result of all the bailouts and all the stimulus that papered over the last crisis. And so now the one we're dealing with is going to be much worse because we kicked the can down the road instead of solving the problems when we had a chance.
Is there a remedy or is the damage already done?
Well, there's a remedy, but it's not without pain. And unfortunately, it's the middle class and the poor that are going to feel the pain the most. Because if the Fed fights inflation, it's middle class and poor people who are going to suffer the most during the inflation fight. If they don't fight inflation because they think they want to spare the middle class the pain of a horrible recession, well, then they're going to suffer even more with massive inflation.
I want to note for the viewers as well, Peter, before the 2008 crisis, you were one of the only ones who did predict it and were warning people at the time, just to give some context. Let's look at the stock market today. How much further can stocks drop by your calculation?
Well, they can drop a lot farther, and they will drop a lot farther until the Fed does an about-face and acknowledges how weak the economy is. See, the Fed is only pretending it's going to fight inflation because it's also pretending that the economy is strong enough to withstand the fight. It's not. Even though the fight is inadequate to solve the inflation problem, it's going to cause a big problem for the economy that is so levered up on debt. And in fact, you talked about the Target earnings. Earnings are collapsing because Target customers are spending all their money on food. And Target doesn't make big profits selling food. It makes profits selling other goods that Americans are now too poor to afford. And so the bad news is now Target has to really raise prices even more, especially for food.
The inflation problem, if you look at businesses and earnings, they performed well last year, right, with the stimulus, etc. It looks like they're getting completely burned at both ends between rising costs and then demand destruction as people can't afford to pay for this stuff, like you said.
Exactly. And, when you have people like Elizabeth Warren claiming that the businesses are gouging the customers, they're not. They're actually not raising prices enough. They have to raise prices more because the businesses have been taking a hit in their margins. And yes, they're going to have to prepare for reduced sales at higher prices because customers don't have the money. And that's when the layoffs begin. See, that's the problem. As companies have to downsize because their customers can't afford their products, those businesses can't afford their workers. And so we're going to get rising inflation and surging unemployment at the same time.
The entire retail sector is having problems. And a lot of other people talking about how strong this economy is. And one of the reasons they claim it's so strong is because the consumer is so strong. The consumer is out there spending. Yeah, they're spending. They're spending it on food. They're spending it on gas. They're spending it on rent. That's not strength. The consumer is strong when they don't have to spend so much money on food and energy, when they have more money left over to buy other stuff. And this data confirms that. If the consumer was so strong, why are all these retailers in bear markets? Why are these stocks getting crushed? Why are the profits collapsing if the consumer is so strong? What's happening in the real world is evidence of just how weak the consumer is. This is more evidence that the Federal Reserve and everybody else wants to ignore. The Biden administration wants to ignore it. It wants to pretend that the economy is strong, even though all of the real world evidence is showing that it's not. The only evidence that we have that the economy is strong is that we still have a low unemployment rate. And we still have a lot of jobs that are unfilled. We have a lot of companies advertising for workers. Well, that can change very quickly. A lot of the companies that are advertising that say they need new workers, they can decide very quickly that they don't need new workers. Clearly, companies that are experiencing a big drop in profits, a lot of these companies may be looking to lay off some of the workers they have because they have to cut costs. They certainly don't want to hire more workers, especially when wages are going up. But again, it's not just consumers spending less because the price of food and energy or rent is up. Interest rates are up. Mortgage rates are up. Consumers are getting squeezed from so many different angles with these rising costs. And to make it worse, the stock market has imploded. And you can't just look at what's happening in the Dow, because the average investor, they don't own the Dow. They own some of the stocks that are down 50, 60, 70, 80, 90%. They are getting slaughtered in their portfolios. So their net worths are going down, their cost of living is going up, they're having to cut back on their consumption. And when we have GDP that is 70% consumer spending, and you see the type of financial stress the consumers are under, and when you see the evidence of that stress being reported by Amazon, by Walmart, by Target, one after another, it's the same story. How much more evidence do you need that the economy is in recession? And again, if all you're doing is hanging your hat on low unemployment and you're looking in the rearview mirror, well, take a look in the windshield at the weekly unemployment claims that were released today.
Peter, you really think the government is going to apply price controls? How would that look?
Well, it would look horrible. I mean, we did it in the 1970s. Why wouldn't they do it again? The government has a history of repeating its mistakes. It never learns from them.
We're seeing layoffs with major companies already, as you said. So, Peter, what should regular Americans do?
Stock up on the stuff that they need now while they can still afford it. I mean, prices are going to go much higher for basic necessities, but eventually the government's going to have price controls, and that means a lot of these necessities won't even be available. You think we have shortages now, wait till you see how bad they get when government imposes price controls. So my advice is to shop now, buy what you can while it's still on the shelves and before prices go even higher.